It's a head-to-head race for the title the fastest growing big economy in the world. The most recent round in this contest for the fourth quarter of last year saw India keeping the crown with 7% versus its rival China with 6.8%. But who wins the new Werthstein challenge from an investor's perspective? The competitors in today's challenge in brief. In China, the government is pushing the restructuring of the economy, but at the expense of growth. A risk in the high debt of many Chinese companies and consumers. Despite all the problems, the uptrend in the stock market seems to be intact. India has recently launched major reforms, and a biometric ID could help the country to advance a lot in the digitization. Parts of the stock market seems to be overheated, but many stocks have potential yet.
The two competitors in figures. It's a draw, with a slight advantage for China in terms of population. As to economic performance, China is the clear winner, $11.4 trillion compared to $2.5 trillion. But in terms of growth, India is slightly ahead. The IMF expects 7.2% for 2017, China lagging behind at 6.2%. A look at per capita economic growth is interesting. Here, India clearly wins the point, with an anticipated annual growth rate of 4%.
India also has the highest growth in a worldwide comparison of countries with large populations. China has slipped to fourth place behind Bangladesh and the Philippines. Giles Keating, president of the Werthstein Institute, has China lost also its appeal to investors?
Well, China's had an incredible run. 3 decades of double-digit growth and another decade of high single-digit growth, lifting hundreds of millions of people out of poverty. It has been a very interesting, if mixed, story for investors. But looking ahead, I really see problems with the restructuring and particularly the debt levels, which have gone up from 150% of GDP to 280% over the last 9 years.
For China, there's been intense debate among investors since the beginning of last year, when the losses on the Shanghai Stock Exchange caused turbulences around the world on fears that the bubble would burst. Now, a year later, stock prices are nearly 20% higher. So the bulls are winning the stock markets, but in the economy itself, has the danger also disappeared? Valerie Planiol, Werthstein Institute fellow in Paris?
Well, not quite. I think the outlook is still quite blurry. The next National Congress of the Communist Party is due this autumn. The government will be geared into consolidating its position. I don't see any long-term reform taking place. And in the meantime, large corporation remains really high in debt without us having a clear view on their strategy.
Robert Ruttman in Zurich, are you more optimistic than Valerie, especially regarding Chinese debt?
Well, I think the fears around Chinese debt are overstated. Recall that the Chinese government can effectively socialize its debt. In other words, shuffle the debt across local and central government agencies and even across state-owned enterprises. So I think the systemic risks are relatively limited.
Okay, looking at the opponent in today's challenge, India, and here the November 8, 2016 plays a key role. You remember on this date?
The 8th of November 2016, a historic date for the entire world. Donald Trump is elected President of the USA. But in India, at least, another man steals the show. In a surprise move, Narendra Modi, Prime Minister of India since 2014, forbids 500 and 1,000 rupee banknotes, which represent around 86% of the cash circulating in the country. The action is intended to curb organized crime, tax evasion, and corruption.
Going to Paris, Valerie Planiol, is step in the right direction?
Well, it's definitely proof that the government was willing to implement measures to make it function better and to improve transparency in the economy. There are still many challenges ahead for India, whether you look at education, whether you look at income distribution to have a wider base of consumers. But really, with the country opening up, infrastructure development, a service-oriented economy, I think there are many investment opportunities.
And now going to London, to Giles Keating. What are the biggest drivers for growth in India?
In India, we've had deregulation, which has really accelerated under the current Prime Minister, Mr. Modi. We've also got very positive demographics. And then there's this fascinating thing of nationwide biometric ID cards, which not only make it much easier to pay Social Security, but open up entire new fields for e-commerce, e-banking, and so on.
And then does India now follow in the footsteps of Europe?
Well, I think this is vital. When India got independence, you really had something like nearly 30 separate economies with customs barriers between them. And that is just about to be torn down with the introduction of a nationwide sales tax, a little bit like bringing in single taxes for VAT across Europe. It creates a single market for the first time in India.
And now to someone who should know it exactly. Sanjit Talukdar, former manager of one of the first major India funds, who is still looking closely at his home country. Can this reform actually have a revolutionary effect?
Well, Stefan, I would agree. I would tend to agree. And moreover, I would say it comes at a fortuitous time, because in a world of rising and nascent protectionism, India needs to look inwards towards its hinterland. And anyway, it is a very strongly consumer-driven economy. The consumer accounts for about 60% of GDP. Net exports only very minimal. So India here is playing to its strengths.
And is India currently attractive for investors?
I believe that Valerie is right. And in addition, one should look at the diversification benefits of investing in India for the German-based investor, or indeed the international investor. The Indian market is much less correlated with European markets and the German market than, for example, the S&P 500.
If you now have to decide as an investor, China or India?
I think one of the big near-term risks is the rising US protectionism. And I think India is better positioned to deal with this, because in any case, net exports account for a very small percent of GDP. It's quite insulated. China is more exposed. So my vote goes for India.
And now I come to the members of the Werthstein Institute. Let me know your votes, China or India?
Well, my vote goes to India.
My vote clearly goes to China.
Well, now my vote goes to India. And so that makes 2-1 in favour of India. And so India is the new Werthstein zeitgeist, and you can now invest in India.
China has lost the challenge. In the opinion of the Werthstein Institute, India takes the lead in attractiveness for investors. Experts believe that the reforms in India are coming quickly, reflected in higher growth rates and rising share prices. If you want to be there, add India to your portfolio.